Well, for more on all of this, I want to bring in Andrew Foster. He's a portfolio manager of Matthews International Capital Management. He oversees over $3.5 billion, joining us live from San Francisco. And, Matthew, you have said before or Andrew, you've said before that, if we don't see a meaningful move in the yuan, let's say in the next 6 months, we could be in an all-out trade war here, right?
I think that's right, Betty. China's done, in my view, a fair bit to liberalize their currency over the last 5 years. They began in 2005, to put it in some context, allowing the renminbi to appreciate, and it's up about 23–24% against the dollar since that time. But that, I'm afraid, is not enough to appease a lot of domestic interest groups, as well as groups overseas at this stage. China does a lot behind the scenes to liberalize the flow in its currency. It's a very constrained currency, and they're giving up a lot of control over it, and we don't see that in the price every day. But I'm afraid tensions have grown to the point now that unless China makes a more marked move on the value of the renminbi, we're probably going to see trade tensions break out. And that's especially true in Japan today. I just got back from that country, and the rhetoric there is very pronounced.
Well, I was going to say, you were mentioning groups overseas as well, and we are talking about the Japanese, right? I mean, they could also be influencing this debate.
That's right. That's right. It was about a week ago that some of their finance ministers started to openly question the purchase of Japanese bonds by the Chinese. And Japan, as we know, is a heavily indebted society. They need folks of all stripes to be buying their bonds, and yet they're actually questioning why the Chinese would do so, whether or not it's a tactical move to somehow sabotage Japanese growth.
Right,
and so if the Japanese are this upset, it's an issue.
They're basically accusing the Chinese of something much more sinister.
Yes, I think so. And if they are at that stage in their thinking, I think we're seeing a number of governments really sour on the currency policies of China. I think China's exhausted most of the slack that it has. So I do think they're going to have to move if they want to avoid some sort of trade war in the next 6 months, trade sanctions at least, and if not an outright war. Okay,
so they have to move, in your view, by how much?
I don't have a magic answer there, but I think they're going to have to move on the order of about 10% in the next year, and they'll have to make some progress in that direction, fairly substantial, in the next 6 months, I would say, if they're going to avert some of the tension that's brewing in D.C. or in Tokyo or even in Europe.